historic legislation is about rebuilding the backbone of this country and giving people in this nation, working people, middle-class folks, people who built the country, a fighting chance.
Late last week, President Joe Biden signed off on the $1.9 trillion COVID relief bill. Welcome back to Inside the Issues. I'm Alex Cohen. The American Rescue Plan will provide economic relief for millions of Americans. To get a better sense of just how much it might provide to households here in Southern California, I checked in earlier with David Rae, president of DRM Wealth Management. I began by asking David about whether a situation so many of us faced this past year, working from home, could help qualify for any deductions.
I hate to be the bearer of bad news, but if you're an employee receiving your income in the form of a W-2, so basically normally you would be going to work, you don't get any tax breaks for working from home. You can thank Donald Trump and his tax plan for that one. If you do have self-employment income, so if you are a gig worker or you have your own business or an independent contractor, you can take the home office deduction, and I highly recommend you at least talk to your tax pro about it because it can be very valuable. And it's amazing how many expenses you really incur when you are working from home, from internet to rent to mortgage to maintenance to all kinds of things.
Yeah, you can't deduct those things, but give us some good news here. What are some changes in store here in 2021, things that people should know about as they file?
Well, the good news is we're seeing a lot of benefits coming through the COVID relief package is kind of some of the good news here. We are seeing if you did have unemployment income, you won't have to owe taxes on the first $10,200 of income that you got from unemployment income. So I should point out, unemployment income is taxable, which is another confusing thing for a lot of people. The big disclaimer here is you have to earn less than $150,000 in your household. So this will help about 40 million taxpayers in the country. It's expected to help. So it's a big amount of people are going to benefit from this, and that's a couple $1,000s in tax savings potentially. So it's huge.
Yeah. And in addition to that, as I heard it, there are some child tax credits on the horizon, and you have a choice here, given the pandemic, in terms of which year you want to include as your taxable income. Can you walk us through this? Because I have kids. I've got skin in the game here.
Yeah. This one will make parents very happy. So Biden is expanding the child tax credit. So previously it was about $2,000 per year per child. It's going up to $3,000 per child per year. And if your kids are under 6 years old, that's increasing to $3,600. And one of the big things here is that if you didn't have enough income, so if you were a lower income parent or just didn't owe much in taxes, if you didn't have $2,000 in taxes, let's say you have 2 kids, you don't have $4,000 in taxes, you just lost out on this benefit. The changes that are coming this year mean that if you don't owe $4,000 in taxes, but you're entitled to $4,000 in credit, they will refund the difference to you. Is one of the big changes. So it really is going to help lift kids out of poverty at the lowest income levels. And it's just going to be a real big help for the parents that are just maybe still working and making a good income, but are struggling to just keep food on the table there. And then another big change is normally you have to wait till you file your taxes to get this benefit. So you go, oh, that's great. I qualified for $2,000 or $4,000 or $6,000 in credit. I'll get it April next year, which is nice, still beneficial, but they're going to start doling out potentially $300 a month checks for people that would be getting the $3,600 benefit now. So you'll have that money when you really need it, because I know so many people that are watching this show are in California are out of work or are underemployed or just catch up from being underemployed during the COVID crisis.
Yeah. Another thing that a lot of people have faced during this COVID crisis is medical bills. What should folks be keeping in mind as they prepare their taxes this season on that front?
Yeah, especially when you combine medical bills. If you've gone through COVID treatment, you know, oh my gosh, even with health insurance, how expensive this can be. So you might actually be able to get a tax break for your medical bills. It's always tax deductible above a certain level relative to your income, but more people are going to benefit from this year just because they've lowered the threshold to 8.5% of your income, which is still a substantial amount of medical bills you have to pay. But if you were unemployed, it really might not be that much of a hurdle, or if your income was down because of COVID. Another big thing is changes to the Affordable Care Act. They're also capping your premiums. So if you're on Obamacare, you still have subsidies at many incomes, but they're going to cap the premium payments that you're responsible for paying at 8.5% of your income. So again, for those people who maybe have high insurance premiums, which is a lot of us, or people who maybe saw their incomes drop or incomes are a little lower, it's going to be really huge tax savings for them there as well.
David Rae, what do you suggest when it comes to how people are filing their taxes and preparing their taxes here in 2021?
This year is a little crazy. It was crazy anyways. And then we're adding the COVID relief bill, which is amazing. So it's all positive here. But there are going to be some people who are probably going to have to amend their return. So if you did have unemployment income last year, I would put off filing your tax returns until we have guidance from the IRS on how to handle taxes on your unemployment benefits. I would also recommend, if your income's right around that $150,000 mark, I would really recommend talking to a tax professional or get more advice, because there are some other deductions you might try and take, like finding a retirement account or all these other things, are going to be super valuable if you can get your income below $150,000, which is where some of the cutoffs for stimulus payments, some of the cutoffs for different tax credits, and some of the cutoffs for the tax break on your unemployment income. So $1 extra of income, if you go to $150,000 and $1, it could cost you thousands and thousands of dollars. So, you know, it's a little, we're past 2020, so we're kind of scrambling at year end, but it is really a year to be proactive with your tax planning, to take your time and really look for every single deduction you can get, which you should do every year, but I get we're busy and people just don't do it. But this year, it can be thousands and thousands of dollars savings, more than normal.
And David, I think one of the most difficult things for me throughout this pandemic, I'm one of those type A personalities. I like to have a schedule. I like to have a routine. I like to know what's coming up in my future. Yeah. All of that has kind of been out the window, right? And I feel like, especially now, as people are returning back to work and kids will eventually go back to school, there's all these changes ahead, but we don't quite know exactly what or when. What's your advice for people to just keep in mind in the rest of this year when it comes to thinking ahead to taxes for the year 2021?
It really highlights the value of having a financial planner like myself, just so we can take all the stress off your plate. We can be like, you can just call me and go, what's happening? And I can tell you what this means for you, because this COVID relief bill is thousands of pages or thousands of words and all this stuff. No one wants to read that unless you're a money nerd like myself who's digging into it. But I can really distill it to what it means for you. I do think you do want to keep your schedule. I think for people who hate to file their taxes on extension, I would still say run your numbers, have an estimated of what your taxes are going to look like, and then file once we have IRS guidance so that you're not having to try and amend it later. The IRS is still dealing with 2019 returns and amendments from there, because that was also a tough year. And you just don't want to be mailing in amendments in paper form, because it's just going to mess up things. It's more stress and more hassle than being off your schedule. But you also don't want to completely procrastinate and just put off filing your taxes, or at least preparing your taxes, because then all of a sudden you'll be in September, October on the end of your extension and going, and I don't like when people do that, because that's when mistakes are made and that's when you pay extra taxes. And I do need to point out that your taxes are still due April 15th, even if you are filing on an extension. So there are penalties and fees if you file later than that. But if you don't actually owe taxes, you might actually earn interest filing later. So there are some trade-offs there.
I have enough in my life without having it in my taxes. So thank you for saving us from some extra. David Rae, thank you so much.
Thanks for having me.